All right, I've got some big news for Symbotic stock investors as I am changing my buy, sell, or hold recommendation on Symbotic stock. Previously, I had the stock rated as a hold, so you're going to want to tune in to see if I'm upgrading or downgrading that recommendation, but I am changing it here in this video. So let's take a look at the change, and then I'll go through an analysis of why and what caused this change from me and my recommendation. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so I previously had Symbotic stock rated as a hold or a market perform, in other words. So in this video or today, I am upgrading Symbotic stock to a borderline buy. It's getting a one-notch upgrade here on June 13th to a borderline buy. And let's take a look at what caused me to upgrade this interesting robotics technology stock. All right, so in its latest quarter, revenue increased by 59% to $424 million. But this wasn't the first quarter the company has grown revenue robustly. If you look back over the last several years, going back to January of 2022, this has been a fast-growing stock that's growing revenue at roughly 60% or above in each and every quarter going back a couple of years. So this is a fast-growing stock, a fast-growing company. And in the quarter, they initiated 3 new system deployments and completed 3 systems, bringing them up to 18 fully operational systems. And if you're not aware of what Symbotic does, they basically turn your warehouse into a automated facility using robotics. So instead of needing, let's say, 100 people to operate a warehouse, you could bring that down to just a few people that are overseeing the robots that are moving boxes from trucks onto shelves and from shelves onto trucks, and so on, and reducing the amount of manual labor required in a warehouse. And given the rising cost of labor, their services have been increasing in demand. So they've also started their system starts to accelerate during the rest of the year. So in the latest quarter, they only initiated 3. For the rest of the year, that's going to accelerate. They're going to do more than 3. They're going to do at least 4. Perhaps even more for the rest of the year. And that's great news because their time to deliver is the key for Symbotic. They have, as we'll see a little bit later, they have a lot of order backlog. It's a matter of them being able to fulfill on those orders, and given the difficulty and complexity of their service, it takes them a long time to do it, and they don't have as much capacity. So if they can get better and improve at deployments, they can start generating revenue from their backlog much quicker. And that's exactly what they've done. They've increased their deployment starts for the rest of the year, and their reductions in system deployment time create capacity to support future customer demand. That's the key I just talked about, right? Their deployment times are decreasing. They're getting better at deploying their service. And if they're getting faster, doing it in less time, that creates more capacity for more orders to be fulfilled throughout a year. So that's going to allow them to generate more revenue because, as you see here, they have over $22.8 billion of backlog, even though that decreased slightly because they were able to implement more new orders, but they have $22.8 billion in backlog. They only generated $400 million in revenue in the latest quarter. If you annualize that, and let's even round it up, let's say they get $2 billion in revenue for this year. At $22.8 billion, they have roughly 10 years of backlog. So they have a lot of orders. They have a lot of interest for their service. It's a matter of getting better at deploying and getting faster and increasing their capacity so that they can fulfill these orders. And that's precisely what they've been able to accomplish. That's what I've been looking for from Symbotic, is improving deployments. And since I've seen that over the last few quarters, that's what's given me the confidence. One of the things that's given me the confidence to upgrade Symbotic stock from a hold to a borderline buy. So some of the innovations they deployed during the second quarter weighed upon their gross margin, but were largely offset by effective cost management and solid project execution. So some of the things they deployed during the quarter had a slight impact on their gross margin, but it improved other things. And this is one company where they've been losing money on the bottom line, but they've been making so much improvement. I've been truly impressed with this company's performance. You could see their operating profit margin, negative 11.09%, but that's much better than the negative 48, negative 50% in January of 2022. So they've accumulated a bit of trust on my end for effective cost management, for effective profitable growth, because they've been improving their operating margin, even though they've been innovating at such a rapid pace, even though they've been growing revenue at such high rates. They've been doing so while expanding or reducing the losses on the bottom line and approaching profitability. Even though they're not there yet, they're approaching profitability. And they do say that they don't expect gross profit margin to improve every quarter, but they do expect it to improve every year. And they have demonstrated that, so that they have earned my confidence in this forecast that they will increase their gross margin over time. And they expect that as they scale over time, their combined recurring gross margins can trend over 60%. That would be a significant improvement from where they currently are. So they have a lot of runway for improvement in profitability, and they've made progress on that front. So as an investor, I can be confident that they can reasonably achieve these goals. And then in a rarity for companies that are growing this fast, they are cash flow positive. Their free cash flow, defined as cash flow from operating activities minus capital expenditures, came in at $21 million and was better than expected during the quarter. The key is that it's positive, that they're a self-sustaining business, that they can fund themselves. They don't need to go out and get capital from investors, but they can opportunistically, which they did. They raised $258 million from a stock sale in February. Opportunistically, they weren't in desperate need for that cash, but they raised the capital. As you can see, their cash flow from operations has grown nicely over the years. And their third quarter, they're forecasting revenue of between $450 million and $470 million, with adjusted earnings before interest, taxes, depreciation at about $28 million, which is a proxy for cash flow. It's not exactly what they'll generate in cash flow, but adjusted EBITDA is an approximation of what they will generate in cash flow. $28 million is solid for a company that's growing as rapidly as they are, and that would represent another quarter of over 40%, 47% to be precise, revenue growth, and it will be an increase in their EBITDA margin. So again, further progress forecasted. Progress was already made during the quarter, and the stock is now trading at a forward price to earnings of 68, which is near the lowest it's been, going all the way back to January of 2023. But also along that timeline, they've made huge improvements, right? They've decreased their time to deployment. They've decreased the operating profit margin loss. They've added order backlog. They've made progress. They've learned how to implement their service. They're in more locations now. They have more experience. So it's trading at the same valuation, even though they've made all of that progress. So I liked what I saw from Symbotic, and that's why it earned that upgrade from me to borderline buy. And if they continue at this pace, I wouldn't be surprised if they earn another upgrade before the year is over. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.